Hey traders, this is Chris Buss with Traders Profit Compass. In the mentorship groups that I host, there's been a fair degree of consternation or lack of confidence in how to set stops and how to take profits, both on intraday trading and swing trading. So what I'd like to do today is just present one methodology, one that I'm comfortable with, and one I think you'd have success with. You may want to pull out a notepad and take some notes as I go through this. Pause the video so you get all the nuances. Okay, so here I've got a 5-minute chart of SPY, just a random day a couple weeks ago. And make note, this methodology works on any time frame. So 5-minute, hourly, daily, whatever time frame you're trading. All your technical analysis tools and methodologies, including this one of setting stops and taking profits, will hold. So you don't have to change anything as you look at different time frames. So here we go. We've got a day here on the 5-minute. We're doing our pre-work. None of this has happened yet. This is in the future, so we really don't know that this has happened. We're doing our pre-work. We see that we're set to gap up in the pre-market. So we go in, and let's just say hypothetically, we identify a resistance here, and we identify support here down around 311. Okay, so we're all in the pre-market. We have resistance identified. We have support identified. We see that in the pre-market we're set for a gap up. Now, in my mind, on this kind of setup, odds are for a short entry. Okay? Regardless of what your methodology is, let's say your bias is short. Okay? So the first candle comes, hits resistance, you're playing for a gap fill. Okay, the first candle completes. The second candle breaks into the gap, and you get short. Okay, are you with me? On that entry, I would put my stop right there at the top of the body of the first candle. Why? On my entries, I tend to keep things pretty tight. If price reverses and takes me out, it takes me out. If you can take more heat, and you decided that you were going to get short right up against resistance, that's fine. You would set your stop slightly above your entry. Okay? So I'll leave it here. We fill the gap, and the candle keeps going. At that point in your mind, you should say, we filled the gap. I would have expected a bounce if we were going higher, but we didn't. We went lower. So the trade's working for you. We get another lower candle, and then it reverses. It comes up, it comes up, it comes up. I haven't done anything with my stop. If it comes up here and takes me out, it takes me out. But it hasn't done that. Comes up here, puts in a topping candle, then starts to reverse lower. Once I see that, I'm going to move my stop down to the top of the swing high. Okay? Trade's going in our direction. It pulled back, reversed. I'm placing my stop at the top of the first swing high. So let's follow the candles. I'm not nervous at all. I'm not guessing. My stop is at the top of of the swing high. Goes down, reverses, gives me 3 topping candles at the same level, and then a big red candle that takes out the prior low. I'm moving my stop down to the next swing high. Are you still with me? Okay. So swing high to swing high. I'm bearish, I'm short. The trade is working for me. At this point, I want to ask you, what is the point of any trade? What is your goal? The goal of any trade is to stay in a trade that's working as long as you can. Make the market take you out. So this trade is working. I don't want to guess where it's going to reverse. I'm just following the candles. The trade's working. I want to stay in it as long as possible. So it goes down. The trade's working. Makes a weak attempt at a reversal. Next candle, same thing. Comes up to near the swing high, reverses. Next candle takes out the low. Moving my stop down to the next swing high. Okay? I'm not nervous. I'm following the methodology. I've moved my stop 3 times down to this swing high. We get a big red candle, another red candle, and a reversal, and another swing high. I move my stop down. Now at this point, we go back to the pre-market planning. If you had identified a zone of support, in your mind, you should be saying to yourself, support is support until broken, and to expect a bounce. That's just TA 101. You sell resistance and you buy support. So at this point, as you move down, or earlier in the trade, you can say to yourself, and even put in an order, buy to close, and when you get that big red candle down to your pre-identified level, the market takes you out. The trade is closed. You took your profits. Okay? So pre-market trading, you identified this level. The trade started working. You're not guessing. You're saying to yourself, if I hit support, I'm taking profits. 90 times out of 100, you'll get at least a bounce. And you don't want to have that give back. Okay? So down here, you had your sell order in. The next 3 candles, they all hit the same place. You're out of the trade. Okay? Are you with me? All right. Let's reset the day in a different way. You identified this as resistance, but as far as you could tell on the charts, there was no support level here. So your support is way down here somewhere below 310. Okay, you start your trade. Everything goes the same. You come down the swing highs. You set your stop at the top of the wick. Okay? It comes up. You set your stop at the swing high. You get a plunge. Then you get a reversal candle. You get another reversal candle. It comes up here, but it didn't take out the swing high, so you didn't move your stop. You're still right here. It comes down, it bounces, big reversal candle here, you're out. You force the market to take you out of your stop. You say to yourself, great trade. I got short here at 316.75. I was taken out at 312.75. I made $4 in 2 hours. And if you're trading leverage with options, or if this was a futures contract, that's a hell of a morning. You take your profits, thank you very much. You could say, I'm done for the day, or I'm going to try to play the long side. That's up to you. But on your first trade, you've done what you had to do. You weren't guessing. You weren't nervous. You weren't taking profits up here because you thought it was going to reverse. You stayed in the trade as long as you could until the market took you out. I hope you got that. So on the downside, you're setting stops at swing highs and staying with it as long as you can. Okay, let's go on to another example. Here we're on a daily time frame. Just any old random stock. Okay? You're not in it. You're watching it. You're not in it. You're sitting there at your desk. You've identified this as a trading range. You've got a baby breakout. You're not in it. You've identified this as support. So here we go. Price breaks in to the prior trading range after a breakout. That's called a head fake. False breakout. In your mind, you should be saying that's bearish. Okay? Whenever you move back into a trading range after breaking out, it's fake. You get short. Okay? For whatever reason, you get short. You place your stop just above your entry. If price reverses and takes out the top of this candle, you're wrong. You're stopped out. Okay, scratch trade, or you lose a little bit. You've pre-identified this level as support. Okay, so in your mind, if we get down there, I'm taking profits. You may already you can either place a sell order at support, just like we did in the prior example, or you can set an alarm and do it manually, but you're planning on a bounce. So you come down, this wick takes you below support, you're out. Doesn't seem like a lot, but you got in around 24 and you got out around 19. You made $5 in 2 days. It's a good trade. Be happy. Now you're thinking, oh my God, it's putting in a bounce. I want to fade that. Okay? Where would you get in? And this is a little off topic, but I just want to go over it. Those are Fibonacci retracements. A 50% retracement, or what's otherwise known as a halfback, is an objective level to try and get short. Okay? Let's say you did that. I'm going to fade this bounce. I got a 50% halfback, and I'm going to try to get short again. You take your short. You set your stop just above the recent high. Okay? You're in the trade. You're going to force the market to take you out. It goes down, hesitates at support, and then breaks. Okay? So you're in the trade and you're winning. Another candle. Big plunge. But you haven't done anything with your short or your stop because there hasn't been a swing high. So it comes up, you get another big candle, you get a swing high, you set your stop. Right here at this swing high. Next candle goes down. Next candle's a big doji. You get another red candle. You haven't done anything. There hasn't been any new swing highs. You get a green candle. It gaps up. You haven't done anything. The market hasn't taken you out yet. And then on this day here, a wick comes up and takes you out. So you made from, say, 2250 down to 1750. Another good trade. Now you could be thinking to yourself, wow, I could have taken profits here, or I could have taken profits there. That's all hindsight. You don't know any of that's going to happen. All you can do is have a methodology and stick to it. Respect your stops and let the market take you out. Okay. You're out of your short. You've made a ton of money. Now you're thinking to yourself, the lows are in. Okay? So now you're thinking about getting long. How would you do that? I'm going to go back to the Fibonacci retracement tool. I'm going to go from the low to the swing high. Here again, 50% retracement, half back of the move. That's often a great place to get long at just below the swing low. So you've identified a place where you want to give it a try on the long side. Okay, you with me? So here's your stop. You got your 50% retracement. You place your stop a little bit below the low at a place where you say, you know what? If I lose that candle low, I know I'm wrong. So you place your stop at a location where the market takes you out. And you're willing to take whatever amount of heat the market can throw at you until a certain point where you know you're wrong. Then you either have your sell order in or you have your alarm set. You honor your stop and you're out. But it didn't do that. It reversed. So here we go. We're winning. Up we go. Up we go. Up we go. We take out this resistance level and we put in a high. We haven't done anything with our stop. Puts in a swing low. Still haven't done anything. When this candle takes out the prior swing high, we move our stop to the swing low. Are you with me? So you had your initial stop, You put in a high, you came back, put in a little bull flag, price gapped above, taking out the prior high, time to move your stop. Up you go. You're still winning. The market hasn't taken you out. We go up. We put in another swing high. Price consolidates. You haven't done anything. You're not scared. Price is not coming down to take you out, so you're staying long. Price consolidates. I'm going to put a little box around that. You box in the trading range. Just as a visual cue, you might want to set an alarm here at the top of the range, letting you know something's changed. This candle right here on this gap up takes out the trading range and the prior highs. Okay? Time to move your stop up. Place your stop just below the low, just below the swing low, just below the bottom of that trading range. You're winning, okay? You're winning. There's no reason to take yourself out of the trade. You're winning. Okay. Another swing high. Price makes a couple tries to take it out and fails. We got a candle here, still has not taken out the high. We come down, we put in a low, put in another candle, still haven't taken out the high. Here on this candle, we take out the high. That's your cue to move up your stop. Just below the swing low. Okay? Are you with me? We go up. We put in another swing high. I'm going to mark it. Maybe I'll make that a different color so you don't confuse it with a stop. You marked your swing high, the green. Okay? Price comes down. Tries to make a new high, but fails. It comes down. Although you might be saying to yourself right here, oh man, I wish I would have taken profits up here. You may be thinking that, but you had no reason to take profits here. Okay? That's all hindsight stuff. And you'll get yourself in trouble if you do that. So notice, price comes down, but it never takes out my stop. My stop was placed here, a few ticks below the swing low. If this were a big red candle, you're out of the trade and you made all of this. Great trade. But it didn't. You're still in the trade. Price reverses, goes up and takes out the swing high, right? Your most recent swing low was right there. You only got to move it up a little bit. Okay? Swing low to swing low. There's your stop. Price puts in another swing high. Right there. You're still in the trade. Okay? when this candle breaks the swing high, you get to move it up, move your stop up to the next swing low. Okay? And then you would just keep working all the way up. Eventually you're going to get taken out. But remember what the point of any trade is. If you get in a winning trade, the point of the trade is stay in as long as you can and while it's working. You would have never guessed down here that you could go from 14 on your entry to 39 for almost a triple. And if you're using options or any kind of leverage, I mean, think about it. That's a massive win. And the nice thing about this is you were following a methodology, you were consistent, you were following a process, you weren't nervous, you weren't guessing. So that is at least one methodology that you could use to keep yourself in a trade and to methodically raise your stops. So if there is a big reversal, the market takes you out, that's fine. That's what markets do. You can't win forever. It's eventually going to reverse, but you've taken the meat out of the trade and you've stayed in as long as possible with no emotion and no guessing. So, I hope it helps. I've gotten some real good feedback from traders in the mentorship group that have kind of implemented this process both in active intraday trading and in their swing trading, and they're seeing good results. So I hope you have the same luck. I look forward to talking to you next time. This has been Chris Buss with Traders Profit Compass. Talk to you soon.